Mark Hill from Greenlees. So another financial demonstration. How much tax do you pay? I've got here £15,000 and I'd like to visualise with you how much taxation is involved with somebody, a young worker, receiving the benefit of that from their employer. Most people think their tax rate is something like 20% because that's the basic rate of tax. In fact, it's a lot more. So I've now translated to monopoly money, and we've got here a big pile of monopoly money. In fact, I've had to steal some from another set, and I'm going to now go through how the £15,000 breaks out. The scenario is this: a young worker, median earnings, so that's about £27,500 in the UK, has just provided a service, say a game or some internet service, for their employer, which has sold £15,000 to the public online, and the employer has said, very reasonably, that the employee will get the full value of those sales after all of the taxes have been dealt with. How much will the new young employee end up with out of £15,000? I think the result might surprise you. Well, the first thing to bear in mind is that if we're talking about an internet sale to the public, then that of course is going to be subject to value-added tax. And value-added tax isn't obviously to most people a tax on labour, but essentially it is. So you'll see the calculations in the explanation below. But the net sale is £1,250. There is £2,500 for £15,000. There is £2,500 worth of VAT to pay. So 500, 1,000, 1,500, 2,000, £2,500 worth of VAT. That's the first cut by the government. I said this was an internet sale, and therefore the internet will itself charge money for the transaction. This isn't strictly a government tax, but nevertheless it is a first call on the revenue, and it's often paid to a government bank. So we are talking now about credit card commission, which I'm going to assume is at a fairly modest 1.8% on the turnover. That is therefore £270. £270 for the credit card. Next is something called the Apprenticeship Levy, which is a little bit unique to the UK perhaps. That is going to be 0.5% of what is going to turn out to be the gross wage cost of £1,000, and the Apprenticeship Levy is therefore £50. Next is employers' national insurance. Now, an employer is forced to pay a tax for employing somebody, which in the UK is at a rather bizarre rate of 13.8%. This employer national insurance is paid by the employer to the HMRC, since 13.8% of £10,000 is 1,380. I have to put £1,380 down here. Now, the next one is of benefit to the employee, but essentially is working in the same way as a tax, and that is a pension scheme. This is compulsory now in the UK, 8% at least over £7,000 per annum minimum. And that 8% has to either be funded by the employer or the employee, or both. Now, the employee has to pay a certain minimum. It's more tax effective if the employer pays it all, and that's what this particular employer does. He pays her employee pension with an 8% contribution. 8% of £10,000 is £800. Now, these are the taxes that arise before the employee has even seen the gross pay. So these are taxes on the employer largely, and you'll see that of the £15,000, those collectively come to £5,000. So the gross wage is now £10,000. How much is the employee going to end up with? Well, the tax that we all know is PAYE income tax. This is a visible tax. This is appearing on the pay slip, and that's got to be 20% of the £10,000. In other words, £2,000. The next one is the employee national insurance. Now, this is at a different rate to the employer national insurance. It's at 12% of the £10,000. So the employee national insurance is £1,200. And the £1,200 isn't the end of it, because of course there is now something called student loan. And student loan for a young graduate like this one is at 9% over 27 for every pound earned over £27,000. She's on median earnings, so therefore she does count for this. She has to pay in full. 9% of £10,000 is £900. And now we get to the net pay. And the net pay is, out of all of this, is £5,900. And the £5,900 is this big pile of money here. You can see that that's already much less than half of the amount that the employee earned, the engineer earned for their company. But she ends up, in fact, with rather less than this. You see, almost invariably, the thing that the young engineer is then going to do is they are then going to go and buy something which is in the nature of equipment, or perhaps a car, or some services, or a meal out. And those services, that car, those the electronic equipment, computers or whatever, those are going to attract VAT. And VAT on £5,900 net wage is £983. So let me just see if I can show you that. So the 983 is 100, 200, 300, 400, 500, 600, 700, 800, 983 pounds. And that is the VAT on the thing which she then goes to buy. Having added all of these up together, you will find that the balance is £4,917. That is the amount of useful money that she receives in her pay packet. Let's just see that. 1,000, 2,000, 3,000, 4, 1, 2, 3, 4, 5, 6, 7, 8, 917 pounds. That is the effective value that the young woman is going to receive for all of the value that she has provided. And the ratio, and therefore the answer to the question, is 67% of her money goes out in various forms of taxation or compulsory dues, and she ends up with 33%. Now, it's often assumed by those on the left, Greens, that we need to increase taxes, and certainly there is a good argument for increasing taxation on those that can afford it. But unfortunately, lost in all of that argument is a similarly important and older claim that we need to reduce taxes on labour and attract taxes and divert taxes to things like land ownership and property and wealth. And the reason is because this acts as a huge disincentive to younger people to develop themselves, to work, to do overtime, to study, to develop their careers, because potentially 2/3 of what they provide in terms of value is taken off in various forms of taxation before they see the value of it. And therefore, a claim that we need to remember, particularly at this time, is that taxation needs to be diverted, and the hidden tax it needs to be diverted from, the hidden tax on labour, is in fact this one. It's VAT. Since if you look at the numbers, the VAT is actually the most significant tax on labour here. That particular tax has raised £3,500 out of the £15,000 value that the young woman started off with. And VAT is also, curiously, a tax that we can do something about now. As we're leaving the European Union, we will once again get control of VAT policy and duties policy, provided the government and the Labour opposition don't conspire to take us into a compulsory, indefinite customs union, and instead retain the power that the Leave vote in 2016 gave to the Commons to set its own trade policy, to set the taxation, the duties, the VAT that arises. And then perhaps that long left claim that VAT is a regressive tax, it is a tax on labour, it is an inflexible tax, it is over-centralised. Perhaps we can start to put that right by reducing it, by making it apply to only those things which we want it to apply to increase the threshold at which you register still further, and to localise it. And this is a tax that in many other countries is administered regionally or locally rather than nationally, and certainly not internationally.